I get asked all the time, do you have the first time homebuyer loan? And the thing is, that would be like walking onto a car lot and asking, do you have the truck? There's a lot of different kinds of trucks and a lot of different brands of trucks, and they're all used for something slightly different with slightly different purposes. The same thing applies to first time homebuyer loans and down payment assistance. As a matter of fact, not all loans that are used for first time homebuyers require that you be one. I'm Matt Wilson, mortgage advisor with New American Funding, and today we're going to take a deep dive into different mortgage options that are available for first time homebuyers to keep as little money out of pocket as possible. All right, so we're going to talk about a few options that are available for down payment assistance or first time homebuyers in Tennessee. So you don't necessarily have to be a first time homebuyer in all cases to utilize these, but you do have to be in Tennessee because Tennessee is not going to help you with buying a house in Wisconsin or something like that. Okay, so with that being said, THDA is down payment assistance. All that down payment assistance is adding a second mortgage on the back of a first mortgage. Your first mortgage can be any of the regular mortgages you probably heard about. They're going to fall into one of two camps: conventional or government. The difference between the two can be confusing, but to simplify it, here's how we'll roll. If it sounds like somebody's name, then it's conventional. If it sounds like alphabet soup, it's government. So Fannie, Freddie, that means conventional. FHA, USDA, VA, government. Got it? Cool. So, with that being said, in addition to that, there's two ways that you can set up THDA to work. The first one is $6,000 in down payment assistance. And with the $6,000 option, you don't have to make a monthly payment on it. You only make payments on it like once you pay the thing off. So it's just what we call a silent second. It's hidden in the background. You don't have to deal with it month to month. The second option is 5% up to $15,000 in down payment assistance. So with that option, you do have a monthly payment and it's just amortized or paid off over 30 years, the same as your regular mortgages. Okay, cool. So this right here is actually the daily rate sheet that the THDA has. You can find it yourself online at this spot right here. The cool thing about THDA loans is it doesn't matter who your lender is. THDA sets the pricing on it. They choose. We don't. So if THDA is what path you're going down, go with the guy that you want to work with because it's all going to wind up the same in the end. All right. So let's look at this broken down in some more detailed numbers. We're going to compare everything to a $2,000 a month rent payment. Seems pretty reasonable for Middle Tennessee, where I live. All right. So first option right here is $6,000 with an FHA loan. So FHA is going to require that you have 3.5% to put down. Let's see what 3.5% looks like. $300,000 times 0.035. $10,500 in down payment. So 6,000 is not quite going to cut it, but you'll have a payment that's pretty good monthly. One of the things about every loan, but especially first time homebuyers, we have to figure out what are we optimizing for? Are we optimizing for a better monthly payment or a better cash to close? We can do our best to hit the middle there, but usually we're going to have to favor one versus the other. So this one right here is going to have the best monthly payment at $22.93. That's all in tax and insurance, whole 9 yards. But it's going to have the worst cash to close because you're using the least amount of down payment assistance. It's not even quite covering all your down payments, much less your closing costs. You can have a seller help with your closing costs by doing a seller credit for up to 6%. In the case of a $300,000 loan, 18 grand. This right here shouldn't be confused though, because you see there's 16 or 17 grand here that you've got for your cash to close. You can't just go and ask them for 18. What you would need to do is you can only have them pay up to what your actual closing costs are. In that case, you're looking at, 12,000 give or take. So keep that in mind. It's just that the 6% is the limit. Most sellers in this market aren't going to pay it anyway. So there you go. Now, let's compare that to 5% down payment assistance with the same loan, same FHA, all that stuff. Monthly payment is going to be higher by $90, whatever, $95, something like that. Can't do head math. That being said, your cash to close is going to be substantially lower at $7,700. Why? Because we're doing 5% instead of $6,000. So in that case, the seller could totally pay all that for you. You could get into this thing with no money. That's how it works for somebody to get into a house with no money down. All right, next column here.
Conventional was 6%. So a lot of people think with conventional loans that you have to put 20% down, and that is not the case. As a matter of fact, if you're a first-time buyer, you can put as little as 3% down. That's it. So the cool thing is with that, conventional is going to allow you to have even lower cash to close, because instead of 3.5% that you had to put down, they're 3%, which means you can use more of that 5% towards your closing costs. But it's going to have a higher monthly payment. That's kind of the trade-off there. And I'm sure you noticed too, for whatever reason, the conventional options get a little higher interest rate, which is fine for the most part, because when you're comparing it to the FHA option, FHA has a little more fees than conventional does. By that, I mean FHA's got a 1.75% funding fee, and mortgage insurance is 0.55% each month. FHA or conventional, I'm sorry, doesn't have a funding fee. It does have mortgage insurance if you're only putting 3% down, but from my experience, that's usually around 0.4 to 0.5%, give or take, depending on several variables. The other thing with conventional is you've got the opportunity usually to be a little more competitive offer, because a lot of sellers prefer a conventional offer to an FHA offer, even though you're using down payment assistance. What they don't know won't hurt them. All right. So $6,000 in down payment assistance with USDA. USDA and VA both give you the opportunity to finance up to 100%. So you're probably thinking, well, like, why the heck would I do down payment assistance if I'm already at 100%? It's because the closing costs are there. Now, the downside to USDA is you can only buy in USDA approved areas, and USDA approved areas are typically going to be in the middle of BFE. That's not entirely true. You don't have to have like a white farmhouse in the middle of a cornfield or anything, but you're for sure not going to get something in a metropolitan area or typically within an hour drive of anything cool. But if living in the country is your jam, this right here is probably the way to go. And it's going to give you a payment that is spectacular at $2,300 and cash to close at $6,400. So you're in, great shape there. If you can go that route, go that route. Other thing with USDA, though, that's a downside is they have a tighter debt to income restriction typically than THDA actually does, which means that a lot of the time you're going to qualify for the lowest amount on USDA. Getting my tongues twisted with all these words, all these letters. All right. So let's take a look at a few things, though, that I like to show people that are first-time homebuyers. First is our net monthly payment. What the net monthly payment is this. If you're paying rent every month, you're paying $2,000 to the landlord to make him rich. If you're paying a mortgage, I'm not going to lie to you and tell you there's not expenses associated with a mortgage. There absolutely is. You got to pay taxes. You got to pay insurance. You got to pay mortgage insurance. You got to pay interest. But the principal is going back to you into the piggy bank that is your house. So the net monthly payment is subtracting that principal, since it's still it's like savings inside your house. It's subtracting that to show you what your payment actually is comparing to, because like the rest of that money is going back to you just in an account that you can't access easily. With that, monthly, it really closes that gap pretty substantially. As you can see, it's not that far off of renting at $2,000 a month. Now, if we look at the next 5 years or 60 months, things get a little ugly. You'd be paying $120,000 to your landlord, $120,000, $120,000 versus getting to save about $19,000 in your equity. And this is assuming that your home doesn't appreciate. And appreciation means that it increases in value over time, which historically it's been about 4% for homes. So, we can do that math later. Check this out. If it's over 10 years, this is where it's really going to hurt your feelings. Over the next 10 years, you'd be $240,000, assuming your landlord never raised your rent. Never met a landlord that wouldn't raise the rent over 10 years. But if yours does, then there you go. This is the best case scenario for you. $240,000 or saving $45,000 for yourself. This is why the average net worth of a homeowner is 44 times higher than the average net worth of a renter. I always like to show people that whenever I'm doing first-time homebuyer stuff. So wanted to make sure that you got to see that too right here.
As you can see, there are a lot of different ways that you can buy your first home in Tennessee and come with as little as money out of pocket as possible. That being said, as you can see, there are a lot of different ways that you can buy your first home, and come up with as little money out of pocket as possible. With that being said, you may find that you have some sort of specific question that you have about your scenario. If that's the case, no worries at all. There's a link where you can schedule a call with me personally in the description of this video. And in addition to that, there is a download link for your free copy of my ebook, How to Make Getting a Mortgage Not Suck, so that when you're buying your first home, it doesn't suck.